More Americans take on multiple jobs to make ends meet. In November, the economy added 263,000 jobs, according to the Bureau of Labor Statistics, topping the economy's average forecast of 200,000. But 165,000 jumping people holding multiple jobs. So that's saying they might have created 263,000 jobs, but 165,000 are people that was holding multiple jobs. Most adults, 68%, either already have or plan to pick up a side gig. The personal savings rate dropped in October to 2.3%, the lowest in 17 years, according to the Commerce Department. Meanwhile, the third quarter, household debt climbed the fastest annual pace since 2008, with credit card balances rising by 15%, the most in 20 years, according to the Fed data. Numbers do lie. Sorry. They said 263 jobs were created in November, but 165 jobs is those holding multiple jobs. So when you hold multiple jobs, you count it twice, even 3 times, depending on how many jobs you have. This is very misleading. 68% of adults already have or plan to pick up a side gig. Credit card debt balances grew by 15%, most in 20 years. Personal savings rate has dropped to a 17-year low to 2.3%. All red flags to the U.S. economy. Record high, $100 billion was paid out in life insurance policies, according to CNN, according to data released from Monday by the American Council of Life Insurance. That's nearly an 11% jump from 2020, which represented the largest year-over-year increase, 15.4% since 1918 influenza pandemic. Yeah, it makes sense because we was in COVID-19 pandemic, so it kind of makes sense for influenza pandemic. This was said to be due to COVID-19, which accounted for 460,000 U.S. deaths in 2021. The average size of new individual policies purchased last year was 189,000. People, please get a life insurance policy, especially the ones out there doing wrong. At least leave your family some money before you go. I hate to say it, but some of y'all need to know. Before the pandemic, 95% of offices were occupied. Today, the number is closer to 47%. Downtown vacancies continue to stay beneath the pre-pandemic levels, causing huge problems in the economy. Businesses are what makes downtown area so attractive, bringing in money for restaurants, transportation, and everything you can think of. Now, with 47% of offices occupied, downtowns are turning into ghost towns. Canceled commercial leases and empty offices has brought property evaluations down, which means less taxes to collect. That's going to be huge for the local state as they need funds to mend their roads and pay for different things statewide. The National League of Cities suggested cities expect at least a 2.5% decline in sales tax receipts and a 4% decline in revenue for the fiscal year 2022. As you can see at this list here, you have Columbus. It shows who have downtown recovered since the pandemic. Columbus is up 112%. Baltimore is up 91%. San Diego is up 89%. Las Vegas, 82%. New York, 78%. Jacksonville, 74%. Phoenix, 71%. Washington, D.C., 65%. Miami, 64%. Nashville, 61%. And the list goes on. But this chart right here is more important. Look how much revenue is missing, right? Look at the property taxes. It's upside down. That's not what you want. That's a bad sign. These are not signs of a thriving economy. All right, let's move forward back to crypto. So you have Goldman Sachs, which is one of the world's largest banks, plan to use this FTX debacle to slide on in the crypto game. So they are planning to spend tens of millions of dollars in crypto to purchase a crypto firm. I don't think this is good. Banks have already proven their disloyalty to customers. The whole reason why crypto was created was to go outside the centralized corrupt banking system. Now look who's trying to come save the day when the bad guy FTX, now they're trying to make their play into crypto, right? That's why I tell people, when it's a recession, look for the silver lining, man. The best investments are made during recessions. Make sure you find the silver lining in every storm, even this financial one, right? Always look on the bright side. Now it's showing how soaring rents has forced millions of young Americans to move back in with their parents this year, according to a new survey. About 1 in 4 millennials are living with their parents, according to the survey of 1,200 people by Polefish for the website propertymanagement.com. That's equivalent to about 18 million people between the ages of 26 and 41. More than half said they moved back in with their family. Don't compare yourself to your parents and what they did at your age, because we are in difficult times. Millions of millennials moved back home this year due to the price of rent and housing going up. 1 in 4 millennials, 18 million people between the ages of 26 and 41 are living with their parents. This is not a sign of a thriving economy. In fact, it's the complete opposite. Let's talk about another reason why these people are moving home. Look at the global wages that's taking a hit, right? Record highs, global stagnation. So the global inflation crisis paired with a lackluster economic growth and an outlook clouded by uncertainties have led to a decline in real wages around the world, a new report published by the International Labor Organization has found. According to the 2022-23 Global Wage Report, global real monthly wages fell 0.9% this year on average, marking the first decline in real earnings at a global scale in the 21st century. This is huge. For the first time ever on record, in 21st century, global wages has declined. Average real wage declines of negative 2.4% in the EU and 3.2% in the United States. This is proof that inflation is a serious problem and is wreaking havoc globally. We have to find ways to combat inflation by purchasing hard assets. Inflation isn't going anywhere, people. I hope you know this. Let's talk about silver. So, silver is one of the assets, right? Silver supply has gone from 69 million ounces surplus in 2020 to 194 million ounces deficit, a total shift of 263 million ounces in just 24 months. Silver is organic money. If you have money that you just want to keep without putting it to work, you just want to save it, you want to put that in some hard assets like physical silver, right? It's going to sustain its value. All right. Silver could be a good play right now due to demands through the roof and supply is largely short. Industrial demand is setting a new high, up 5% to 539 million ounces. Jewelry and silverware will also hit new highs, up 29% to 235 million ounces. Bar and coin investment jumped to a new peak of 18% to 329 million ounces. It's not going to give you crypto returns, but it's nothing like having some OG money. All right, we're going to end on this. So, the legendary Apple creator, Tony Fadell, who actually created the iPod, has now created a hard wallet. A crypto hard wallet ledger, basically like a junk drive where you can store your crypto in offline. This just goes to show you how crypto isn't going anywhere. That this legend will team up with this crypto wallet company to actually give you this device. The idea behind bringing Tony Fadell to design it was to make it more attractive. The ledger stacks will retail for $279 compared to $79 from the Nano S Plus and $149 from the Nano X wallet. And the last thing, one of the world's leading asset managers with $1.3 trillion in assets is now looking and exploring the use cases of NFTs. This is another bullish sign of crypto and NFTs on how a lot of people are trying to adapt this technology because it's going to be the future. If you like the content, please comment below, like, and subscribe to our channel. And if you have any topics you want us to cover, please list it below in the comments.